So at this point, we'll just look at the bigger picture and kind of figure out what could be next. So let's start with the daily chart, right? So this is kind of what we're dealing with. We're basically heading back up into, this swing high, and this is going to be an interesting spot because, the market's a bit overdone into it now. So some consolidation and balancing would be quite normal. And, that's why like the resistance zones up here, you can see are bold and they mark stronger resistance. So we had a trend day today. Usually after this type of day, you're not going to get like a reversal, but it wouldn't be a big deal for the market to now maybe consolidate and do some balancing. And as long as it's balancing, kind of in the upper quadrant of today's range, and it could even go higher and test like, one of these zones, but then it might start consolidating and maybe forming another like trading range over here. And then eventually, who knows, it could go even higher, right? But right now, short term, we know that the buyers are dominant and in control, and eventually these areas can get taken out. But since we're day traders, we know that on the smaller time frame, there can still be responses at these zones. It could even happen overnight. Wouldn't really be too surprising. But clearly over the past few days, the environment has been shifting, right? And the character of price action has been changing. For example, breakouts are working, breakdowns are failing again. Those are things to kind of pay attention to on a day-by-day basis, because it starts on the day and then it slowly builds and you start seeing it on the larger time frame. But one of the benefits of being a day trader is that you're very much connected with the smaller time frame, and all of these signs of big reversals, they first show up on the smaller time frame, and then they make their way up into the larger time frames. So as a day trader, you can be much more in tune with, what the market state is like right now. And that's why, like, once we hit this extreme down at 2600-ish, right? And this was a strong area of support too. If you go back and you look at the directional bias that we've had ever since then, it hasn't been bearish, right? I think we flipped our intermediate to like neutral or something a day later. And then the short term even got bullish in between, and then neutral, and then bullish today. So the directional bias section of the trader worksheet is quite valuable, and it can kind of guide you as to, what the state of the market is. So, right now, clearly the buyers are dominant, but at the same time, we can't forget that just a couple of weeks ago we were down at 2603. Just 3 or 4 days ago we were down at 2700, and now we're up at 28, 17, 18. That's the whole thing about looking at the market contextually, right? That's part of the context. How much has the market moved? What's the recent swing low? Well, clearly now the market is getting overdone into better areas of resistance where it can be a little more difficult for the market to take those areas out. And even if those areas get taken out short term, it doesn't mean that the market just has to scream back up and continue going. We know that now the next step is probably going to be a consolidation phase. Now, and that's all short-term stuff, right? Because we're day trading. So like there's no point in thinking about where the market's going to be 2 weeks from now. It's completely irrelevant to us. We're really focused where the market's going to be tonight, tomorrow, maybe the day after at most, but that's about it. So now that it is hitting, some better spots of resistance, and if we look at kind of this big swing from top to bottom, we can see it kind of coincides with the 61 0.8 of the whole move from the recent high to the recent low. So clearly this is now a friction area. It's an area where it's going to take some effort from the buyers to push it through. And just because it made sense to buy, down at 27.30 to 27.50 doesn't mean that it's going to make just as much sense to buy 28.25. So there's more of a chance for us to see profit taking up here. Anyone who's still bearish on the market is going to see this as an opportunity to secure a good location. So there's a higher chance of kind of a struggle between buyers and sellers here. So I think it's going to take much more effort to really push through these areas. And that's why, these zones can still end up being spots where we can get some short setups on the day time frame. And on the day time frame, they can provide some decent targets because, if we, let's say, only consolidate, not really even like, the big part of the range, let's say, being conservative, let's say we consolidate just kind of within this range, right? Between like 28.01 and, 28.23 or something. I mean, that's still a big range to work with. For day trading, that's still a nice 25, 30 point range to work with where there can be some decent responses in between, and then we can kind of consolidate, go back and forth, and it can trigger some short setups. But again, the short-term bias is bullish, so now we're just going to be mindful of that, and that means that if you're taking a short setup and you notice that like the momentum is really not favoring the short side, well then you might just be early. You might have to take the next zone, and then maybe you get a better sell response. So within, these areas, kind of the higher you go, the higher the odds of sellers stepping in. So from here on out, the higher you push, the higher the odds of sellers stepping in. The higher you push, the bigger the response can be. So now we're going to have to be a little more balanced on the long side, right? Be a little more cautious of taking any aggressive longs up here because sellers can step in one of these areas. But then once they step in, and let's say if we do get a push down, then buyers can still step in too because, this is still now turning into a more bullish environment yet again. So as we get any moves lower, buyers can step in. It's going to be kind of a back and forth type environment. That's just a view based on today, right? Based on what we know right now. With day trading, you have to be willing to adapt and adjust. And that means that if we get back-to-back trend days or something, then, the view is going to adjust, right? The purpose of this context update is not to predict where the market's going. It is simply to kind of lay out what the current state is, and based on that, what we could expect, how we can kind of build a strategy around it, be ready for it. And if E-mini S&P is your primary market, then the best way to stay connected and in sync with at least our views on the market is to be a member on the EminiPlayer.net site. It's extremely low cost, and I think the value it provides is just so many times more. So if you are trading the E-mini S&P, then definitely check that out.